It was a very weird day on the crypto markets overnight. I went to bed and the market was pumping on what I thought was very, very bullish CPI news. And in the long run, in fairness, it may end up being quite bullish for the crypto market. But then almost just afterwards, we saw a massive wick to the downside on Bitcoin, basically wiping most of the traders in the market out due to rumors of the US government dumping Bitcoin right in front of us. So in today's show, I want to go over what happened with CPI, discuss what the potential implications could be going forward. Then I want to talk about the current environment of the market and how this is conducive to market manipulation, like we've seen over the last few hours with this US government rumor. And I'll get into why it's a rumor and what it means when they will actually sell. Then I want to discuss some of the supply overhangs currently affecting the market. So related to token unlocks, related to Jump and Jane Street, reducing the frequency and quantity of their market making. And then at the end of the show, we'll talk about some of the altcoins I'm looking at. One altcoin I'm actually buying right now, and I'm going to tell you why. And yeah, we'll save that for the end, and I'll do a Q&A at the end as usual. But first, let's get into all that other fun stuff. Firstly, with CPI. So the April CPI inflation data actually showed the US inflation falling to 4.9%, below expectations of 5%. So it came in under expectations. Now, when CPI comes in under expectations, that means that inflation is coming down faster than expected. And inflation coming down is good because it increases the likelihood of the Fed pivoting into a rate cut cycle because they no longer have that, crazy mandate to keep hiking rates. However, the one important thing to keep note of is the Fed has been quite vocal about the fact that they're targeting that 2% inflation rate. So although we're now at 4.9%, we're still a ways off that 2% target. Now, whether we get there, I'm not sure. They might just accept that a new baseline will be 3 to 3.5%. But all I know is that inflation coming down is generally a good thing, and inflation going under expectations for markets is generally a good thing. And I think you've seen this being reflected in the Bitcoin price prior to that US government news, which we'll also talk about in a second. So this marked the 10th consecutive monthly drop in inflation. So in terms of the Fed hiking interest rates, if we look at the effectiveness of this policy using just the inflation rate as a measure for success, then we could probably verify that it has been a success so far. The only issue is, of course, when you raise rates, there's usually a lagging effect between the effect that it has in the short term and the effect that it has in the long term. And what I mean by that is when you raise rates really significantly, you probably don't see some of the detrimental effects. Yes, you see inflation coming down, but you don't see the impacts it's going to have on the banking system like we've been seeing recently or what it's going to have on supply markets until a ways bit later. So I'm still kind of wary heading in, to the rest of this year, just given the fact that when you raise rates really quick, you tend to break shit. We've seen the banks break, and I wouldn't be surprised if more industries broke as well, because typically what we see is recessions actually hitting after the cycle ends or after a Fed pivot. So just because there's a pivot doesn't mean we're completely out of the clear. I think there's still macro headwinds for the remainder of this year, but I actually did a tweet yesterday. I said, look, it's very hard to have an edge on macro, and I stand by that. There's very few people that have an edge on macro in this market. So all we can really do, because we don't know what Jerome Powell's going to say next meeting, all we can really do is look at the data in front of us and make our best guess as to what type of trader we want to be in this environment. Do we want to be more aggressive? Do we want to be more conservative? Do we want to be, moderately aggressive? That's kind of, if you watch that interview I did with 𝗕𝗏𝗄𝗧, that's what he said. He said, based on the macro environment, I'll basically put myself into 3 buckets: conservative, moderately aggressive, and super aggressive. And at any given point, I'm in one of those buckets. So if that helps you guys try and frame your investment strategy during certain market periods, I think that could be a good tip, because it's good to just basically use macro as a way to frame your overall tolerance to risk rather than your sole vehicle to get an edge, because it is hard to get an edge on macro, as I previously said. And Jerome Powell's really probably the only guy in the world that has a significant edge on macro because he knows what he's going to say next, right? 𝗕𝗆𝗵𝗵𝗏 said US CPI has moved down from a peak of 9.1% to 4.9% in April. What's driving that decline? Lower rates of inflation in fuel oil, gasoline, used cars, gas utilities, medical care, apparel, new cars, food at home, and electricity. So it's very interesting to see where the inflation is actually coming down the most significantly. Fuel, gasoline, cars, this is the kind of area where we're seeing significant decreases after we had that crazy increase period in the year of 2021 and 2022. We've seen a relatively stagnant growth or reduction, around like other sectors, although it has largely been a reduction. Although shelter, rent cost, I'm assuming this is referring to, has actually gone up year on year. Transportation's actually that's gone down a little bit. So we've seen some changes, but basically overall we've seen a few significant changes in a few specific sectors. And the rates of inflation in the transportation, food away from home, shelter have increased since last June, but declines in other major components have outweighed these increases. The blue is the current level, and then the red is the last year. So we could see significant changes in these bottom four to counteract some of the changes up the list a little bit more. 𝗕𝗊𝗄 made a good point here. This is basically the chart of the rates. So basically, whenever the Fed makes a rate decision, the market starts to price in a future rate decision, and it gives it a probability. And these probabilities are forward-looking based on future rate hikes, and this gives the market an indication as to what kind of monetary cycle we're going to be in heading into the end of this year and the beginning of next year. So he said, futures now see a 38% chance of rate cuts beginning in July, much sooner than previously expected. Now, 6 months ago, we sat here thinking that we weren't going to get a rate cut until 2024. Now we're saying, well, actually, there's like almost a 50% chance, a 38% chance that there actually could be a rate cut this July. And the odds of an additional rate hike this year are now down all the way to 15%. And the odds of an additional rate cut just this year in general is now extremely, extremely high. And this is quite a dramatic shift in the market. This is saying, okay, we actually think now that the Fed is going to pivot. This is like a real thing. We can see it in the probabilities. This is what the market is expecting. We are still well above 2%, but inflation is down for 10 consecutive months. So I think the overall direction of inflation is what will have the Fed quite happy, and will have like investors I can't even speak right now. That's what will have investors slightly happier as well, to see that inflation rate coming down. I literally got no sleep last night. That's why I kept delaying the show this morning. I was trying to just wake myself up. I finally had a coffee and got awake, but apparently I still can't string my words together. So here's the target rate probabilities for the June meeting. We see the next meeting, there is a large probability we get a rate pause. There's a slight probability we get a rate hike, but this is very slight, and I think the market is anticipating a pause, and then we can look at probably an additional pause before maybe getting a rate cut, but the probability of that is still a 38% chance. So we can't assume that will be the case, but maybe we can assume that there will be a Fed pivot later in the year. Whenever there's a macro event, I always look to Fabian for an opinion, just because I really respect his opinion and think he has good input. So, and since I'm not a macro expert and he knows the macro space better than me, I'll read out his take here. I think it's interesting. He said, at face value, a CPI print of 4.9% and 0.4% month on month might seem like it's still far too elevated and changing too slowly, but a deeper look into the components of the report reveal a different story. The component that the Fed references the most, the core services, excluding rent of shelter, came in at a very cool 0.1% month on month. Rent of shelter is the largest contributor to CPI, making up more than 1/3 of the entire report. And stripping it out gives us surprisingly cool reading across the rest of the economy. In fact, rent of shelter itself has declined in April to levels not seen since early 2022 on a month-on-month basis, a very promising sign going forward. And this time, it came at a time when the crowd was expecting an upside surprise because of hot used car sales data, which is also expected to come in moderate from here on out. This particular CPI release was being looked at for confirmation that the Fed is able to pause next month, and with inflation cooling across the board, they just got the green light. So once again, just more of an indicator here that we may be heading toward a pivot. And it's very interesting because shelter makes up such a large component of the CPI that it can sway the numbers that much. If you remove them here, we can actually see what the chart starts to look like. So it's very interesting. I think I'm online with Fabian's opinion. I think definitely the Fed now has a green light to pause. That's what the CME probabilities are telling us, that they will pause. They might have a slight more license to cut. We just need to wait and see on that. Macro Alf said the inflation subcomponent Powell cares the most about Core services just rose 0.11% last month. As I said already, all points towards the idea that the Fed is done hiking. So he is kind of saying a similar thing to Fabian. So how did the markets react to this? In theory, the markets should have pumped, right? Because we had inflation coming in cooler, the likelihood of a Fed pivot increased. We know that stocks and crypto thrive in a low interest rate environment. Well, exactly, we did get a pump. So we were at 27.5, and just pretty much within an hour of the CPI data getting released, we were already at 28,332. Now, at this time, dominance was increasing, so it was still a Bitcoin-led run, although some alts started to perform really well during that time. I saw CFX, actually a coin that I'm interested in, and I probably won't talk about this today, but I'm looking at the China narrative because June 1st, Hong Kong starts to legalize their retail crypto trading. So I think ahead of that, we could see a narrative for China coins. That's why I'm looking at CFX. Once again, I'll probably talk about that more tomorrow, but a little bit of alpha if you want to get the jump start on some research there. Definitely look into the Hong Kong stuff. But apart from some of the hot coins like that, a lot of the altcoins were, just exhibiting like small pumps, and then Bitcoin had its rally because Bitcoin's been really leading most of the rallies recently. We know this because dominance, by and large, if we look at the daily and the weekly, has been in an uptrend. And typically when you're in a dominance uptrend, when you do get bullish market news, Bitcoin will tend to lead, and then alts will kind of tend to run later. And we see this ebb and flow back and forth between Bitcoin and alts, but Bitcoin gradually grinding upwards, which is what we're seeing. Actually, if we look at dominance now, it had and I don't think TA on dominance is like the be all and end all, but I find it a very interesting indicator to at least factor into my trading. We see a bounce off the MA. More importantly, we're kind of getting this test of the 47.8 level, this horizontal level. Once again, no one really trades dominance technical analysis, so it's not like it's not like an altcoin where if a major support level breaks, we could be looking at huge downside. To me, it's more just an indicator of a general momentum, and the fact is we've now had a slight pullback, and this is now a critical area for dominance to make its decision as to whether it wants to resume the uptrend like it has been, or whether it wants to come back down. And look, we don't know if this is just a bullish confirmation support test until we make a new high, but we have had a lower high in here. So just interesting bit of price action this on the dominant side. So Bitcoin was looking good, right? But largely it was a Bitcoin run. But then almost a few hours later, 4 hours later, we saw a massive dump, and I was asleep during this dump. So I was very surprised to wake up in the morning seeing a $27,500 Bitcoin, because when I went to sleep, it was 28,200. I was thinking, okay, CPI looks good. Fed pivot likelihood goes up. Typically, what happens in this environment is Bitcoin will have a pump, maybe to 29-ish K. I was thinking probably 29, but this market manipulation struck once again, and anyone that opened a long, especially late longs, got wrecked on leverage. Now, if you actually look on the daily chart and look at what happened, this was one of the most violent and dangerous wicks to be a part of for a single day. Like, you have this tiny body here, like the price barely moved, but you have huge swings to the upside and then a huge swing to the downside. Overall, this range comprises a 5.7% move. Now, if you use 10x leverage on a position, you would have lost 50% either way. So if you shorted here 50%, longed here 50%. So that's a very easy way to get wrecked, especially with alts, because alts move like typically more aggressively, especially to the downside. Right now, Bitcoin's been pumping more when the market pumps, but alts have been dumping more when the market dumps. So if you were a longer of altcoins during the CPI, you probably would have gotten wrecked, because any sort of significant 7 to 10x plus leverage, you would have gotten probably smoked. I mean, yeah, you would have if you opened a CPI trade. And that's why I recommend just trading key levels and not really trying to trade these CPIs too much. Time and time again, CPIs and FOMCs are a recipe to get wrecked. And I've just learnt my lesson way too many times to try and time another CPI move. So basically, when it comes to why Bitcoin dropped, it's because of this. The US government selling Bitcoin, or that's what we thought, until it was revealed that they weren't actually moving Bitcoin and it was just another tweet. But all this news started to come out about the US Gov selling Bitcoin. I think something came up on Arkham to show that they were transferring, but Arkham said nothing came up on their end. Basically, it was this self-perpetuating FUD cycle on Twitter in the early hours of the morning while I was asleep. Apparently, there was a lot of panic, and I went through my tweets this morning and I saw a lot of panic about this Bitcoin US government dump, and then that's probably why we got this wick down to 26,880. But there was actually no movement. 𝗧𝗥𝗗𝗃 and Arkham both confirmed this. But it spells something much bigger for the market, this Bitcoin thing, right? Because this was just the alarm bell. This was just a false alarm. We know that Bitcoin is being sold by the government throughout the remainder of this year. They have publicly stated they have another 41,500 Bitcoin that they are planning on selling over 4 installments throughout the remainder of 2023. So why does the market keep panicking every time there's a rumor of the US government selling Bitcoin when we know that they're selling Bitcoin? It's not new news. It's not some huge shock. Like, we know they're going to sell. It's any day now they're going to sell. Any day. Could be tomorrow, could be the day after. Any day now we are going to see the US government sell probably 10,000 Bitcoin in a day. So if these are the movements we're getting on false alarms, what happens during the real thing? I think we get a much more severe dump during the real thing, because this was just a bit of FUD and then it was debunked like 30 minutes later. What happens if the government leaves us hanging for hours? Because what they'll likely do is they'll transfer Bitcoin from their wallet to an exchange or an OTC desk or something, and we won't actually see the Bitcoin being sold. We'll just see the transfer. So there may not actually be any sell pressure yet, but the fact that it's moved gets people worried. And without any debunkers, because you won't be able to debunk this because it will actually happen, how deep can the correction go? Well, probably pretty deep, just based on the last 2 times we've gotten this FUD, the market's dumped pretty heavily. But is this actually the market panicking, or is it just market manipulation? I would say a bit of both. I find it very convenient that just after bullish CPI news and a relatively strong move to the upside, and alts starting to look quite good and some reclaiming their support levels, that all of a sudden, after people start getting more comfortable to long, there's this rumor that comes out about Bitcoin, the US government selling again, and then the market dumps again. It seems to me like your classic market maker distribution, market manipulation. The thing you have to realize is crypto is very manipulated. And the more I'm in this space, the more I realize this. The order books are very, very manipulated, and price action is very manipulated. And unfortunately, if you're trading, super high leverage and taking on a lot of risk, it's an easy way to get wrecked unless you implement good risk management. Now, of course, leverage is an amazing tool if you know how to use it right. The problem is a lot of people don't know how to use it right. It should actually be to reduce your positions rather than increase them. For example, if I want to take a $1,000 trade on Bitcoin on 10x leverage, I can do that, and I'll have $10,000 worth of exposure to Bitcoin without having to put in $10,000 of capital. So I've just freed up $9,000. I've gotten the same dollar exposure to a trade, and now that $9,000, I can do whatever else I want with it. So it's capital efficiency is the major reason to use leverage, not actually to increase risk. It's not, I can get an extra $9,000. No, it's more so, no, I can save an extra $9,000 that I already have, and now I can use that elsewhere, or I can look to hedge my positions using leverage without putting a crazy amount of size in. That's where leverage is really, really cool. But unfortunately, it's used as a vehicle to speculate, and obviously the exchanges know this, the market makers know this, and as a result, you get these huge, crazy manipulations. But I do think the wick on Bitcoin to the downside, nonetheless, due to US government fears, panic, coming out strategically at that time, that's going to, if this was the test run, what's going to happen on the actual run? That's what I want to know. Like, obviously, last time when the US government sold, I actually think it was on the was it on March 11th or something? It was like around here. And they sold, and I remember the market crashed a lot, but then it actually bounced super strongly because we had this banking Bitcoin flight to safety narrative, because all these banks were collapsing, remember, back in March. So this is actually when the government sold. So it did cause a dip, but then it was eaten up straight away. So the last sale was actually bullish for the markets. The only thing I worry about is this time, do we get this catalyst? Do we have this strong banking narrative that's driving the price in the midst of selling that can eat up demand? The problem is when you have a supply overhang and there's no demand, the overhang tends to get the better of price. Whereas in the past, we've had bearish events during bullish markets. So bad news is now starting to affect the market badly. Whereas before, bad news ended up being bullish a lot of the time. So I think what Bitcoin needs right now is a catalyst, to be honest with you. I think we need a narrative. The banking narrative has dried up for whatever reason. It's probably just a reflection of the fact that we've pumped 100% since the bottom. Now it's looking, closer to, like, I think 85%, but nonetheless, it's a huge pump off the lows. And I think buyers are just exhausted heading into pretty heavy resistance. There's a lot of underwater holders that want to sell at 32. There's a lot of shorters that want to sell at 32. And it's just made it pretty difficult for Bitcoin to make this next move to the upside for the time being. So this not Mt. Gox. Well, Mt. Gox is a potential overhang. But this US Gov kind of Bitcoin selling thing, that spooked markets this morning. Just a quick update on the S&P before we get into some of the token unlocks I want to discuss. Basically nothing much to report here. Another test of this. When I sell, the bull will start. Exactly, DJ Jack. In fact, can you tell me the minute you sell, Jack? Tell me the minute you sell, and then all of us will get in. And don't worry, we'll share the profits with you. But just make sure you tell us when you sell. So the S&P looks, pretty much nothing to report here. Still this major zone, 4,200. That's what you want to clear and hold. But yeah, looks like we're heading towards the top of the range. If we get rejected here, I think a move down to 39 is kind of your next logical zone. Obviously, we've got this major support as well, the 200 MA. But yeah, this is an index at the end of the day. It's not an individual stock. So it's more of a momentum gauger. And the momentum's telling me, I think, a pullback's probably more likely than a pump and a breakthrough, because stocks are kind of like Bitcoin, right? They need catalysts as well. DXY, this is kind of our best case here would be a DXY in terms of like the bullish perspective breakdown from this support zone, because a lower dollar is obviously good for equities. It's good for Bitcoin, but we are at support. So I'm expecting the dollar to bounce here. Last time we tested, we bounced. This time we've tested for quite a while. We are knocking the door down though, so just keep your eye on the Dixie. I think we probably do get a bounce, but if we break down below, this would be very good for crypto. So just watch critical support now, really last support at the 101 zone for the dollar index. That's something to watch, and it didn't react too well to the rate cut new probabilities, because obviously the dollar is stronger in a higher interest rate environment because more foreign capital is parking their money in the US, which makes a stronger dollar. But now you kind of have rates reducing, or at least, now planning to reduce, in the same time you're having de-dollarization, so international trade settlements not settling in US denominated terms, which is creating, I guess, a slight bearish environment short term for the dollar, which is why it's been dropping. So very interested to see if it keeps dropping, because that could actually end up being a good thing for crypto, at least, the crypto USD pairs. If the US dollar is genuinely just devaluing though, and crypto's going up as a reflection of that, you're not really making dollars. Well, you are technically, but you're making an asset that's going down. So maybe you're better off to stack sats instead. At least that's my opinion. Stack some sats. I love stacking dollars, by the way. I'm a big advocate, and if you watch, so you know this, of holding cash, because it gives you, still Bitcoin isn't that liquid and the network's congested. So, I'm a big proponent of stacking cash, having some liquidity. Thank you so much, Lloyd, for saying you love the show. I love you too. I appreciate you coming. Yeah, it's good to have liquidity, which gives you like the advantage to trade in and out of positions when there's opportunities. So that's why I like cash. So that's why I take profits into cash. That's why I like to stack cash. But in terms of like anything longer than a 2-year hold on cash, I'm much more interested in stacking Bitcoin. Certainly not trying to create a huge dollar portfolio. It's more so for short-term liquidity. And right now I'm pretty cash heavy. Pretty much the cash heaviest I've been in a long time, basically just because all new income I've earned, plus all profits I've taken over this latest run have gone into cash and haven't gone back into the markets yet. I'll make a decision on that. I'm nibbling off some small plays. Like at the end of the show, we're going to talk about something I am nibbling at. But in general, I'm still pretty cash heavy, waiting to do more significant deployments on alts when the time's right. I think we need to go a little bit lower first, and you'll know as soon as I buy alts really aggressively. I'll tell you on the show. The downside to having a lot of cash is the reckless spending. Maybe it's just me, like my ADHD brain, but I keep booking like all these crazy holidays and shit just because I have too much. It kind of sounds wankish. I have too much cash, but it kind of is the thing. Like when you just have money in a bank account, you kind of tend to spend more. So I really got to rein that in. I literally just booked 2 5-star villas in Greece for this summer. And I'll tell you what, the bank account did take a hit because Greece is freaking expensive booking last minute. I don't know if any of you guys go to Greece, but man, Mykonos is like crazy. It was like unbelievable, like a couple $1,000s a night, like ridiculous. So expensive. So anyway, that'll be fun. I'll keep you up to date on my Instagram when I go traveling. Actually, by the way, before we get into this unlock stuff, speaking of traveling, I'm going to Miami on Tuesday, so in 4 days, and also going to visit New York after. But if you're in Miami for the crypto conference, come say hi. We actually do have links in the description to a code which you can use to sign up, get a 20% discount if you want to go to Bitcoin Miami, and we'll do a meet and greet for everyone there, part of the Banter fam. I think some of the Banter fam are even having dinner with us that purchased those codes. So I'm looking forward to anyone that's watching this show that did end up buying a ticket and is coming to dinner with us. I'm looking forward to it. It'll be super fun. And if you are in Miami at the time, come say hi. We'll all be there. Me, Ran, I think Sheldon as well. All of us, all of them will be there. And yeah, it should be a really fun time. So that's the next travel plans that I'm home for the entirety of June. And then later on, I'll head over to Europe, over to Sicily, and then over to Greece. So it'll be a good break. To be honest, I kind of need a break from these markets sometimes, because I feel like this last week, I don't know if anyone else feels the same, but I feel like this last week in particular has been really draining in the markets. And like as a content creator, we feel this because we're constantly like not just trading ourselves, but also making content about what we're trading, or just about the market in general. So you kind of like, you really feel the sentiment, because basically like content thrives with sentiment, right? And the sentiment was super bullish. So it was just this meme coin mania, like, you know, PEPE, all these other coins, rotations into shit coins, all this stuff. But I actually, you know, came out of it, and I made like an 8x on PEPE, so I'm pretty happy. But I came out of it feeling really drained, because I didn't really like, obviously, you know, I did get into crypto for the money. I think you'd be lying if you said that you didn't. But you know, as I've spent more time in this space, I've really become more of a subscriber to decentralized ideologies, and I've learned a lot more about what products this ecosystem needs to actually develop as an industry long term, what kind of protocols we need to launch in order to target the markets we want to target. And for me, I would get the most fulfillment out of seeing those products being built, seeing those AAA games being built, seeing those amazing exchanges being built that are fast, that have lots of liquidity, that are quick, like seeing an L1 that can truly scale and doesn't have congestion being built. I would get more satisfaction out of that and making money off that, because, you know, I identified a really strong fundamental bet, than some freaking meme coin that just pumped and just makes the space look dumb. So it's kind of been a really draining week, because, you know, I'm really into the fundamentals, and it kind of sucks to like when you're just reminded that all anyone cares about is making money off memes, and they don't give a shit what they make money off. They just want to make money. And I think that's okay. Like, I get it. Like, even a lot of you and even myself, like, we all want to make money, but it's a little bit draining. And I kind of at the end of the week sat here and I thought, you know, it'd just be great if we just got back to fundamentals for a second and actually remembered like why we're in this industry. And it's not just to pump and freaking dump and buy and sell meme coins. It's just so, I don't know. It's just so weird to me. And it was a pretty draining week, in my opinion. Anyway, I don't know if you guys feel the same, if you agree with this. Miles' show is better than Rand's show. I don't know. I'm not going to say anything to that in case Rand's watching. Miles has reached capitulation. What are you on about, Bangkok Bert? I actually did pretty well off meme coins, to be honest with you. Dollar-wise, it's more mental capitulation than it is dollar capitulation. I'm actually, I haven't sold anything. I haven't panic sold anything. I'm actually looking at buying some stuff, which we're going to get into. Not really capitulating, but yeah, mentally maybe a bit drained. I think that's more what I'm saying. Hi, Miles GBT. Hi, Brandon. What's up? No, pretty much just trying to make fast money. Yeah, and look, crypto is a great way to make fast money. This is my personal opinion. It may be my personal opinion too. I mean, I take pride in what I do, and I think I believe if you don't think you're the best, then don't do it. Like, why, you know, if you played football, why would you go out onto the football pitch and think like you're the worst player on the pitch? It wouldn't make sense, right? So obviously, you know, I'm gonna say my show's the best because I take pride in my work and I want to be the best. And I think that's a good attitude to have, even in trading. You want to be the best. The market's PvP. If you want to make money, you need to beat others. And that's just the reality of how the market's structured. So let's get into this unlock discussion. Quickly before we get into that, I want to remind you, actually, this is pretty big for Prime XBT. They've given out the first ever promo code for a 20% cashback deposit. It's pretty big. So the dashboard isn't updated. It still says $7,000. It doesn't have the new promo code. This is the code Miles. Instead of using the code Miles, use Miles20. If you use Miles20 instead of Miles, you get a 20% deposit bonus for the first 100 users only. So after 100 of you do it, it's over. What this means is up to $6,440, you can get a 20% bonus relative to your deposit. So if you deposit $1,000, you get $200 back to trade with. So it's a free 200. Or if you put in, $10,000, you'll get 2,000. So it's actually a very big deposit bonus. It's actually the biggest deposit bonus I think I've ever done on a show. Because the ByBit one, yeah, it's up to 30,000. But the problem is, to get that 30,000, you literally need to deposit millions. So if you deposited $100 into ByBit, you'd probably get a few dollars. Whereas this is $100 for $20 or $1,000 for $200. So it's actually the biggest deposit bonus percentage-wise I think I've ever done on the show. So if you do want to trade on Prime XBT, it is a good exchange. It's a bit different though. It's more for I mean, they've got Forex, they've also got crypto, of course. They've got Bitcoin, they've got ETH, they've got some altcoins. But it's interesting. They've got like indices and other types of assets as well to trade with. But definitely check it out. It's a good exchange. And if you want to use it, then yeah, you can use Miles20 and get a discount. Thought I'd present that to you because it's a pretty big cashback. So let's talk about token unlocks now. I read this article earlier in the year, but I saw it being retweeted a couple days ago. And you guys know I did a show about unlocks yesterday. Basically, May has over $700 million worth of unlocks. It's one of the biggest unlocks month of the year. For that reason, I said just be wary. Like we're in a situation where we have Bitcoin supply overhang with Mt. Gox and the US government. We had Shanghai as supply overhang. That's now over. We now have some altcoin supply overhang. We have Jump and Jane Street exiting crypto. We'll talk about that in a second. That's supply overhang. We have Voyager. That's supply overhang. In fact, that's a pretty good tweet idea. I'm gonna do a full thread on this. I think, either a thread or like a 3-part post on like what each supply event is. I just wrote it down on my phone on my notes. Sometimes I just get ideas when I'm talking. But yeah, I'll probably do a thread on this or at least a post on this actually about like some of the major events. But basically, the TLDR is we have a lot of overhang events, and I think it's important to be aware of these events. Not necessarily just jump to the conclusion that they're bearish, but analyze them case by case. And through thinking about all of these unlocks, and if you want to know more about unlocks, watch yesterday's show. I talked about it a lot, and I don't want to repeat myself 2 days in a row, especially for the viewers that watch every single day. But when we talk about unlocks, I think it's important to be very wary of which altcoins are monetarily at a disadvantage and which altcoins are at an advantage from a supply perspective. And I think before investing in a token, it's so important to research the tokenomics. And I just wanted to go through a few tokens today with tokenomics that weren't so optimal, just to give you an idea of how you could potentially get wrecked trading a token that has huge dilution. By the way, huge dilution in a bull market isn't so much a problem. Why? Because in a bull market, you have insane buy demand coming in for a token at any given time, which tends to be a very what's it called? The word's not adaptive. I don't know. The word I'm looking for is like it gives you a way out. It gives you an out, right? Because even if there's a token with bad tokenomics, or a farm with too much dilution in a bull market, it doesn't really matter because the support of the buy demand is enough to basically always counteract the sell pressure on that token in a bull market. Whereas in a bear market, or whatever this market is, it's a sideways market. And yeah, you might think 15 to 30 isn't sideways and back down to 20 wouldn't be sideways, but generally that actually just is one big range. If you take that opinion, we're in a sideways market and we're just in a big range and we don't have a clear trend. Yes, we've been in an uptrend, but now we're starting to level out. Then you could come to the assertion, irrespective of whether you think it's bear or sideways, or I mean, it's certainly not a thriving bull market. We can can assert that for sure. But whatever your conclusion is, we know that the market conditions aren't as favorable to token dilution. So when you have tokens hitting the market in a market like this, especially when you get bearish periods, it's much worse. So here are a few tokens that have a lot of dilution to come. 𝗬𝗎, ridiculous. I don't even know why they bothered launching with such crazy dilution. Like, it's nuts. I don't really get it. Especially when your early contributors are the ones receiving 943 million tokens in a day. So, I mean, November 3rd or November 8th, whenever it is, I would highly, highly advise staying away from this around that period. It might be a trader's dream if we get volatility. Look, to be honest, if I had to trade 𝗬𝗎, I would long it and then I would short it. I wouldn't short it now because what tends to happen is low liquidity coins like this with less than 10% of their supply on the market tend to pump pretty violently, and you get those short squeezes because it has low liquidity. So it's a risky short now, but over time, you have to imagine that this will be diluted to death. Arbitrum, not as bad, but still something to keep in mind that the majority of tokens weren't actually airdropped, and there are still quite a lot of tokens to come. More than half of the supply is set to come to the market. In fact, I'll get the exact figure for you on the Arbitrum page. By the way, Arbitrum's a token I like, and I think its valuation is almost factored into the FDV, which is at 11.6. But even when FDV is factored in, you never really know the full effect of supply on the market. Like, we think the market's rational, right? As traders, we think the market is always thinking about fully diluted, and we think the market's always appropriately pricing a token. But the problem is when supply hits the market and push comes to shove, we often see different price action from what we anticipate. So I wouldn't be surprised if we do see some dips on Arbitrum. Even though its FDV looks okay for me, it's still around optimism, and Arbitrum's arguably better than optimism. We still don't know how the market's going to react in practice. So it's still what I'm wary of, to be honest. Arbitrum. I'm still holding my airdrop, by the way. I'm not planning on selling it, but I'm pretty wary of it, and that's why I haven't bought much more spot. But I do trade it because I think it's a good coin to trade. Aptos, especially in that first week, it was really obeying structure really well, and we had some good trading opportunities on it. Both shows have great alpha for sure. I think Rand's more news based. OKX Maldives winner, you won. Really? Well, congrats. Because I was hoping, I asked yesterday. I don't know if I just missed your comment, but I asked yesterday for the winner to actually show face, and looks like you've won. So wow, amazing. Congrats on that. I don't know. Did you take the 7,000 or are you taking the holiday? I think probably just take the 7,000 and book your own holiday. But congrats nonetheless if you're telling the truth, which I'll give you the benefit of the doubt on. And look, if anyone didn't win, there still is a chance to win the Tesla, which is actually the biggest prize yet. There's a link in the description. It's the first link. Click on that link, and if you use that link, you can join the trading competition to win a Tesla. We have 2 weeks to go, so every dollar counts towards this Tesla as you can build up raffle tickets based on trading volume. And yeah, good luck to everyone trading there. It's the final week. It's the go time for the Tesla. Oh, amazing. You won 7,500. That's what I love to hear. I love it when actual viewers of the show win, and not just people that just come on for the links. That's like amazing. That's amazing. Well, congrats. I think that's huge. 7,500. Book yourself a holiday. Maybe spend 2,000 on a holiday, and then spend the other 5,000 invest the other 5,000. I mean, yeah, I don't know what your financial situation is. If that's a lot of money to you, I think what I would do is last couple of days I watched late, took the 7,500. See what's late as well. Depending on what I mean, yeah, I won't get into financial advice, but I think you can do a lot with $5,000 in terms of building a business. I think the best investments for the majority of people, and this actually applies to basically everyone, but the best investment to make is actually in yourself, not actually in just crypto, because $5,000 can go a long way to scaling a new business that can make you 10x, 100x multiples in the long run. Whether that's investing in automation, whether that's investing in more employees, whether that's investing in tech, I'm not sure. But if you have a little bit of entrepreneurial blood, a little bit of money can go a long way. So I think anyone in the comments that wants to do their own business, you 100% should. And you should, I I think that's the number one way to actually make money in crypto too. It's the thing people don't really want to hear, because they want to hear that you can make instant money for free overnight. And although, yeah, you can, the much more sustainable and high probability way to make money in this space with less risk is actually just to have a huge fucking cash flow outside of crypto and then put money into crypto. So before I was in crypto, I've done all sorts of like entrepreneurial business ventures, but I had like a pretty significant stock portfolio which I built up. I was like getting into some real estate stuff as well. More like REIT investing, so like cash flow, passive investing. And then I would use like cash flow to invest in the markets. And then when I started new businesses, what I would do is then I would funnel profits from those businesses into crypto. So I was always finding ways to make money. And even if this is just your job, it's the same thing, right? Just on a different scale. I was always finding ways to make money and invest back into the markets. That's the number one tip for long-term success in crypto. It's this ideology is not really the word. Idiom, is that the word? But whatever the word is, it's this strategy basically of focusing on how to make money. What's this sound constantly going off? What the hell? Oh, it's my TV. My TV's on. Let me turn it off. It's like listening to me in the background. It's so weird. Anyway, yeah, so the saying goes like focus on where to make money first and then focus on where to invest it later, rather than my PlayStation keeps turning on. Why is this going on? Turn off. Please, there we go. Thanks, LG. Yeah, focus on where to invest it later. Focus on where to make money first. That's like my number one tip, rather than trying to invest it and make the money through investing, because it's going to be a lot harder for you than just having a cash flow. Someone said comb your hair. You want to know the funny story behind this? Oh, it's not really a funny story. I just didn't have a comb in the bathroom. I was too lazy to go downstairs and get it. That's basically not really a funny story. Ghost in the house? Yeah, it's weird. Why did that turn on? Super weird. It was making this sound I'd never heard before. Like, ding. Super odd. So back to the unlock discussion. Aptos as well has huge dilution. Point is, watch for dilution. Look at token unlocks. See when tokens are unlocking. Trade accordingly. And if you're a holder of these tokens, just be aware of it and look for opportunities post-unlock. I love DYDX, but one of the reasons why I didn't buy it is because the unlock was so significant. And what's interesting is companies like DYDX, they're here. Yeah, I know, right? Companies like DYDX, oftentimes what they do is they put big strategic announcements around unlocks, like V4, you're not ready, and you're not ready for V4, and like they hype up all this stuff before the unlock just to like limit sell pressure. So what happened was that they did all this hype in September. The market dropped a bit further, but then when they announced that they were pushing their unlock back, the token rallied. So you have to be aware of playing more of a long game with these trades and not trying to like short the unlock day and then trying to make money on that day, because it often doesn't work like that. It's often kind of buy the rumor, sell the news, and they'll sometimes try their best, these projects, to like manipulate prices so they don't end up crashing on unlock day. Because think about it, DYDX Foundation and all these other projects, they hold a shit ton of tokens. They want to see their bags going to zero. They don't want to see their bags going to zero. We have a supply overhang as well with Voyager. This is something to be aware of. I talked about this yesterday. 38 unsupported coins being sold. That's another overhang. And then the third overhang, or the fourth if you include Bitcoin, is Jane Street and Jump pulling back on crypto trading. Now, I did a thread on this last night. I deleted the thread. Some of you have made notice why I deleted the thread. Because one of the numbers I used was wrong. And I realized as soon as I posted it that Jump actually custodies money for Robinhood. So if we look at Jump's wallet, not all of these tokens Jump actually holds. So some of this Ethereum is actually Robinhood's ETH that they're just holding onto them and using it for market making. So basically the reason why I deleted the thread wasn't because it was wrong. Technically, they do hold, $3.8 billion worth of tokens. But I just didn't want to make it seem like Jump had access to it all and could dump it all, because I feel like that's a bit of a stretch. And like I didn't want to like FUD for no unnecessary reason. So like 30 minutes after I posted, I took the post down. It's annoying because if Twitter had an edit button on Threads, which they don't, which is really frustrating, I would have clicked the edit and I would have edited the dollar amount, or I would have said they have $4 billion in tokens, but keep in mind some of this is custodied by Robinhood. Like I would have said that and it would have cleared the air. But unfortunately, Twitter Threads you can't edit, so I had no way to edit this post to add that bit of information, which isn't really public info, by the way. No one no, like I had to do some digging to find this out, and yeah, I also had to talk to like VCs to find out that this was actually the case. And I also found out that other accounts like Unlock's Calendar and all these other big like Nance and these other like big accounts were like posting the same data using Jump's wallets and like assuming it was theirs, when not all of it is theirs. Now some of it is theirs, but not all of it is. I just wanted to make that clear in case anyone wanted to know why I took down that thread. Bit annoying. I really do want an edit button on threads. Please, Elon Musk. But yeah, basically the story here was from the thread, and I'll actually read out the thread because I have it saved before I removed it. I said, first, let's assert the purpose of a market maker in crypto. So Jump and Jane Street are two of the biggest market makers who are now pulling back from trading digital assets, according to a Bloomberg article. So they've stated their intent to pull back, to scale back crypto trading and market making. But what actually is market making? Very important to understand the implications on the market here. Well, their sole role is to provide liquidity to ensure there's enough liquidity in order books. So what market makers will do is they'll set bids and they'll set asks, and bids and asks basically give the market liquidity so we can have efficient execution on an order book. So you need market makers providing liquidity, because an illiquid market is a very inefficient market, and you get crazy price swings, and no one wants an inefficient market. So liquidity is the number one backbone of crypto. Actually, right now we're seeing a low liquidity environment, which is quite dangerous, has a lot of ramifications. Won't get into them too much now, but it does, and that's one of the issues with the market at the moment. But in general, market makers are very, very important because they play this role in market making. But there's a lot of regulatory pressure right now from the US. There's the threat of the SEC sanctions on like Coinbase and Kraken and these other companies, and they're cracking down on the crypto banks, like basically all the banks that have collapsed are crypto involved. They're clamping down on the on-ramps, the off-ramps. All these US regulatory headwinds have created a very unfavorable environment for market makers like Jump and Jane Street, who operate primarily in the US. So what they've decided is to scale back from crypto trading in the US, and essentially, like, they claim that it's made it difficult to operate the business in a way that meets internal standards. So the Bloomberg article was the first one that broke this, said Jane Street's going even further by scaling back its crypto ambitions globally. Jump Crypto is pulling back from the US for the same reason. Although they're still making markets just on a smaller scale, they're not abandoning crypto entirely. So what does market making on a smaller scale mean? Okay, well, logically, this assumes that there'll be a reduction in trading volume. So there'll be less bids, less asks. But this could lead to Jump and Jane Street selling assets because they don't really need as many assets now if they scale back. If they scale back market making by 20%, they don't need as much crypto. They don't need to provide liquidity with holdings, right? They don't need as much if they aren't market making as much. So Jump is an early stage investor in many, many crypto projects. We can see here they're in Aptos, they're in all these projects here that are listed. They're even in Solana, they're in Hashflow, like Polygon, Sui, like they're in a lot, Injective, huge projects. And the only logical thing to assume is because they're a big VC and also a market maker, when they receive some of these token unlocks, if they no longer need the same amount of tokens to market make, won't they just sell some of these positions? So it's got me thinking, like, we could see upon unlocks of some of the tokens that they hold a significant kind of sell event, right? That's just the first conclusion. The second conclusion might be Jump will also reduce material exposure to the crypto market. So it may not just be new unlocks that they sell, they may also sell existing holdings because they don't need as much to market make. And they also said that they wanted to pull back. Jane Street as well. Jane Street holds $230 million of crypto. They want to pull back. That might mean they sell some of their assets. Now, Jane Street just owns Ethereum, so it's not really impacting the market at all. It'll barely move the needle. Even their Lincoln Uni, it's nothing, right? So I wouldn't worry too much about Jane Street. Of course, whenever a big market maker leaves, it's not good. It means less liquidity, so there's that negative effect. But in terms of like net crypto price action short term, don't think it impacts that much. Jump, however, they may have a lot more exposure. It's just weird though, because we don't know what they're custodying and what they're not from this wallet. If it's all custody, then this wallet's useless. But if there's some merit to saying, look, 50% of this Matic is theirs, then 35 million becomes a much more significant amount, or $1 billion of ETH there, then, you know, 2 billion becomes a more significant amount. We don't know, but look, I probably wouldn't panic just because we don't know. But just know that there is an overhang. Now, Jump Capital, we know that they hold these. So they hold Pendle, Lido, AVAX, Lena. They hold these kind of tokens. Maybe they look to scale out of them. We've actually seen their balance start to decrease, largely due to market conditions. Maybe also a bit of selling going on, but not much. But basically, the short of it is you're getting two of the biggest crypto market makers leaving the US. Jump will probably go international, which could be its own bullish catalyst for crypto long term. But short term, I think it's undeniable it's a headwind. And although that they might not hold that much crypto, it's just another small supply overhang now to the kind of added to the market. That, you know, if they do reduce exposure, they may sell some assets. So that's that. All right, let's get into some altcoins now, because I don't know, I didn't plan on this being a bearish show, but it's kind of for some reason come out as bearish. I mean, I'm just being honest. I'm just kind of telling you what I'm researching. I think unlocks are important. I think it's important to understand macro headwinds. But there are also some alts I'm interested in. So let's talk about some more fun stuff now. Crypto will win. CBDC has nothing to do with crypto. I actually think CBDCs are an advertisement for crypto. Why? Because people that use a CBDC are going to use it, realize, fuck, this is fast. Wow, blockchain's good. What? We can actually do this in a decentralized manner? What? We can use this tech, still get the same efficiency, but actually own our own coins? What the hell? I want to use that. I think it's actually an advertisement. I think, I think people will get a taste for blockchain through CBDCs, and then hopefully through that they might be conditioned into using a network like Bitcoin or ETH, as long as they're actually usable. Right now, they're congested as all hell. Really, really hard to trade on a congested network like that. CBDC is like a credit card. Still, they have control over it and can mint more at will. CBDCs are terrible for the world. Unfortunately, this is exactly what's happening. Why do you think the US banking system's condensed from 40,000 banks in 1920 to now 4,000 banks? And over the last few months, we've seen dozens of more banks starting to collapse. Why do you think we're seeing that? Well, the reason being, it's much easier for the government to control the banking sector when JP Morgan, Goldman Sachs, and Wells Fargo own the whole market, an American bank. It's much easier to implement a CBDC if only 4 banks control the whole American market. It's very sad that the regional banking sector is collapsing. Nationalization of the banking sector is not good for the economy at all, and a CBDC is also not good. But that's where the Fed wants to go. I mean, that's what happens when you go off the gold standard and you print your money to death. You need to reinvent the wheel. And unfortunately, this latest banking collapse saga is just giving another excuse to propel this narrative, in my opinion. Look, it's just my opinion. I might be wrong, but I mean, I think it's pretty damn obvious at this point what's happening. Everyone's kind of waking up to it. But unfortunately, there's nothing really we can do unless you just want to move countries, and that's basically it. I'm sorry if you're in the US, it's really your only choice. I don't know what else to tell you. Although different parties have different views. Even on the crypto thing, the Democrats hate crypto seemingly more than the Republicans. That's what the narrative's telling us at the moment. So maybe a new government would be, if we get one. I say we, I'm not even American, but if they get one, then it could be decent. We'll see. For crypto, from a crypto perspective, I have no political views in the US at all. I have no political views at all. I don't really have political views here. I try and stay away as much as possible from politics, unless it's I don't know. I just find it so let's not get into politics. It's the one thing you don't talk about. But I find that I find it very draining. Nothing really good nothing really good in life comes from worrying about shit that you can't control. So I just tend to focus during my day now on things I can control. It's really all you can do. All right, let's get into alts. I did discuss one altcoin I'd be looking at buying. Here's my call. Stacks 50 cents. Not financial advice. Do your own research. I am seeing this Bitcoin narrative starting to gain a lot of steam with the BRC20 and ordinals. I think there's not many proxy bets to the ecosystem. I think Stacks is one of them. For that reason, I think it becomes a decent buy. Now, why aren't I buying today? Because we just broke below support, and this kind of looks like a bearish retest, unfortunately. So your next major support's at 50 cents. So that's what I'm looking for. This zone. If I can get a buy in this zone, that is a great long-term spot zone to load up. So that is where I'll buy some Stacks. In terms of a PEPE update, this is a sideways coin. It's literally a stable coin. Bizarre. Probably because you have whales selling, but then you also have speculators longing on perps, and it's kind of just this mosh posh of volume. Like, the volume's insane. If we actually go onto PEPE, look at the trading volume. It's nuts. Like 300. I mean, this is less than yesterday. It's 390 mil now. It was like literally almost $1 billion yesterday, which exceeded its market cap for like 2 days straight almost. So with PEPE, I mean, I would wait for a more decisive move. I would be interested in like taking a scalp long here. I'd be interested in trying my luck at a short here. Obviously, with any move to either side, if I get stopped out at entry, then I will look to like flip based on confirmation. So that's kind of my playbook. But unless we get a breakout either side of the range, I think this is still the most logical scenario. Just a bounce of either side. That's how I'll play it anyway. I'm playing it pretty basic. I mean, basic trading on PEPE's worked so far. That's how I'll trade it. If you want to trade PEPE, you can do it on ByBit. You can also do it on OKX if you want to go for the OKX Tesla. If you're in the trading comp for the ByBit Tesla, you can trade over here. I'm currently ranked. Where am I ranked? Oh, I'm not even logged in. Hold on, let me check. Let me just log in. Log in. Oh, it's making me do capture codes and all. Okay. ByBit will not let me log in because I need an authenticator code, which is on my phone, which is on Do Not Disturb. But anyway, it doesn't matter. I think I'm ranked like 40th. I'm still up like 60%. So if you want to sign up for ByBit and get involved in the trading comp, there's a link in the description below. So that's that. Let's talk about some other altcoins now. Let's go into Crypto Bubbles just to wrap up the show. PEPE stable? Yeah, it's literally a stable coin. Pre-workout drink before gym? I just have a coffee. I just have a coffee, bro. That's it. I used to take pre-workout and I used to get jittery, and what it used to do is make me like shake for like 2 hours after the gym. And after that, I said, I just don't need this stress. I'm already like enough like on edge as it is. Just I don't need to be like more stressed. I need more so like I need a depressant, not a stimulant. So at the gym, I just have a coffee. That's it. Caffeine, don't react that good to. FXS. Okay, let's check out FXS. It did drop a lot. Yeah, look at this. Oh, I hate this price action. Shit. I'm holding a bit of spot FXS. It's a position I want to build. So this is in the building category for me. Like, I've got coins that I want to buy. I've got coins that I want to sell. This is in my buy zone at some point. It's one I want to stack. You do have lows here, which we still haven't broken, but we're on the edge of danger. This is not a buy zone. You guys know I trade alts on the BTC pairs a lot because I think if BTC is like leading the market right now, if you're not beating BTC, then just don't trade alts right now. And you have a Frax breakdown actually. So this was our short signal, to go short on Frax, which was on the signal on BTC was on the 3rd of May. Let's see if it actually been profitable. 3rd of May, 7.3. So that's a 16% move. So yeah, always trade on the BTC pairs. CBD post workout, but then you're just constantly like a cocktail of drugs. You go from pre-workout to weed. What about a CBDC post workout? Super farm. I'll let Elio shill that. Greetings from California. I'm actually flying to California, but I'm just stopping through next week. I'm not visiting, unfortunately. I would like to visit one day. I'd love to visit, but like San Fran, LA, but I'm just doing East Coast this time. Oh, this lack of sleep's really catching up with me. I always try and get 8 hours, but last night I got like 4.5 because I was just so freaking tired. I actually have a meeting in 3 minutes. That's funny. So I better go to that. So yeah, that's that for the day. Thank you guys for hanging out. If you want to, by the way, Apex, I'm getting a lot of questions about ByBit KYC. You can actually access Apex through ByBit. Apex isn't KYC, and you have self-custody of your own assets, and it's basically the same kind of structure that you're used to on ByBit. So definitely, if you're looking to trade on a DEX, consider Apex as an option. I think it's a very decent option. So yeah, just thought I'd mention that because I still get questions about ByBit KYC. Yes, they implemented KYC. Yes, I've KYC'd, but I know some of you don't like it. Remember the Prime XBT code. There's only 100. Don't use Miles. Use Miles 20. It should be in the new description. And then you'll get that 20% bonus back. And then we've also got the ByBit and OKX comps. So good luck if you're trading in those comps. 8 hours is too much. No, disagree. 5 hours is not enough. You just feel shit. 7's okay, but 5's not. I don't think it's enough. For me, maybe when you're older, but for me, I was wrecked. All right, I'll see you in the next stream. Should be tomorrow. If not, it will be the day after. But nonetheless, I'll see you later in the week. And hopefully we get some big market moves for some volatility and not just this stupid scam wick stuff we've been getting over the last 24 hours or so. I'll see you in the next one. Have a lovely day. Peace out.